What if you could get paid 6.8% a year from a company that's raised its dividend for 56 straight years and just popped 21% in the last 12 months? Today we're breaking down Altria, ticker MO, one of the most controversial cash machines in the market. Is it a smart income play or a ticking regulatory time bomb? Let's find out. In this video, quick chart check, dividends you can set your watch to, 2025 earnings guidance, and the real risks that could smack this stock. Stick around to the end for my game plan and a simple checklist you can use before you hit buy. Quick reminder, this isn't financial advice, I'm just sharing research so you can make your own decisions. If you like deep dives on dividend stocks, hit that like button, subscribe, and ring the bell so you don't miss the next one. Altria Group, ticker MO, is one of the biggest tobacco players in the US. They sell smokable products like Marlboro cigarettes, plus oral tobacco and nicotine pouches. They're almost entirely US focused, which cuts out currency risk but piles on domestic regulatory risk. As of July 22, 2025, Altria closed at $59.44. That's about a 21% gain over the last year and just a hair under its 52-week high of $61.26. Pre-market, basically flat at $59.46. Volume's been choppy, anywhere from about 4.8 million to over 23 million shares a day. Big spikes hit June 20th and July 9th, usually around dividends or earnings. Technically, Altria's in a comfy spot. Price is above both the 50-day, $59.05, and 200-day, $55.78 moving averages. That's bullish. RSI is around 54, middle of the road, so it's not overbought. MACD shows a slight divergence, nothing dramatic. And with a beta of 0.62, Altria tends to move less than the market. Translation, less drama, more naps. Let's talk money. In 2024, Altria pulled in $24 billion in net revenue, or $20.4 billion after excise taxes. Reported EPS was $6.54, adjusted EPS was $5.12, adjusted strips out one-time stuff. Where's that money coming from? The smokable segment still pays the bills, massive margins around 53%, but volumes keep shrinking. Oral tobacco, think pouches, had about $654 million in revenue and even fatter margins at 66%. Growth there is tiny but positive. For 2025, management guides adjusted EPS to $5.22 to $5.37. That's 2% to 5% growth. CAPEX is light, $175 to $225 million, and D&A around $290 million. Tax rate, mid-20s. In short, slow, steady, predictable. Here's why most people buy Altria, the dividend. Current annual payout is $4.08 a share, paid quarterly at $1.02. Yield, about 6.86% at today's price. They've raised it for 56 straight years. Yep, dividend king territory. Their target payout ratio is around 80% of adjusted earnings. Right now they're under that, around the high 60s. In 2024, they paid out $6.8 billion in dividends and still had room. Management says, expect mid-single-digit dividend growth through 2028. Now the other side, regulations never sleep, FDA rules, flavor bans, tax hikes, all can hit volumes or margins. Cigarette volumes are shrinking every year. Health lawsuits are a forever thing. And ESG screens mean some funds won't touch this stock at all, keeping valuation multiples in the bargain bin. Also, Altria is US heavy. No currency swings, sure, but you're fully exposed to US regulators and a slowly declining smoking base. Altria usually trades cheaper than the market because tobacco. That can be good if you're hunting value and income. The chart says uptrend, the dividend says reliable, and guidance says slow growth. My simple checklist before buying: is price above both moving averages? Is yield still covered by earnings? Any fresh regulatory shocks on the horizon? Always check. Is the stock near your personal support zone, say mid-50s? Or are you okay buying near highs? Does this fit your ethics and portfolio goals? Only you can answer that. For conservative, income-first investors, Altria looks like a steady paycheck with modest upside. For growth hunters, probably not. So, Altria, cash cow or value trap? Drop your take in the comments. If you got value from this breakdown, smash that like button and subscribe. Next up is another high-yield name with a very different risk profile. See you there.